Hola. Hello, hello, Truth Seeker. First to the chat window. That's right. It's me today. Tuesday is kind of our round robin day. Kind of me and Andy and Chris all kind of look at each other like, who's doing today? Who did last week? So you never really know what you're going to get on a Tuesday. But hello, nonetheless. Welcome to the desktop. I usually just start rambling with market commentary. Again, as usual, it's the support session. So anybody that was sent here needing support, that's priority. What I'm noticing is a lot. I'm still holding my little hedge fund that I've been holding, a lot of positions, and I can go over some of those, all of them, later throughout the hour. But, this last 6 days here, just 7 days, 7 trading days since we've gapped above the key 200-day moving average in the NASDAQ, which I think is the leading indicator. Let's just see if that's the case. SPY, relatively speaking, not the same. IWM, not quite there yet. So small caps are the laggers. And I actually like small caps. As you see, when I go through my list of names, there'll be a lot of small caps in there. And I'm kind of hoping that this IWM index will certainly catch up to the big heavyweight tech Qs. I like to play the small caps more because they just you can have 8-10% days really easily. You can't get 8-10% days with NVDA and Tesla. I mean, you can, but they're few and far between. Amazon, whatnot. Pull back to the 130. Yeah, that's definitely been in play. Why has it been in play? Well, because we've got an up market that's just kind of moving sideways. And so what Truth Seeker is talking about, there's this scan that I'm highlighting, and these arrows, ideally we want them to be nice and close to this rising blue line here, and this is what this scan is designed for. That's an ETF inverse. That could probably be pretty goofy, but yeah, this is the perfect environment for it, Truth Seeker. I would not be surprised to see a lot of good. We could actually, just for fun, I was actually thinking about that. Let's back test it just for 7 days. The last 7 days, as we've been above, we could say, let's back test. And the last time we did this, we determined this scan, if you remember, Truth Seeker, worked best to exit at the end of the day, I think I recall. And so we'll shrink it down to just the last 7 days. And again, we could go the full 63 days, but you're going to have a lot of bear market selling days in there, and you're going to throw off that skew. The point being is you've got to know when to deploy this scan. And typically you want the market to be up, stocks to be kind of pausing and pulling back and giving some back. And you're looking for that area where the people who maybe chased the price are just exhausted and frustrated, and they capitulate right into that 130 line. I almost refuse to sell a position at that line because I need to see how the buyers will defend it, or maybe they won't. So what we're going to do here, again, if you just joined, we're looking at this pullback scan. We're going to simulate the last 7 days. Our risk management, we'll keep it simple, 1.5% risk to try and make 5% throughout the day. Maybe we can do that. We can even tighten that up a little bit. We probably should tighten that up. Let's do that. Let's make it one to make 3, maybe 4. We could get really aggressive. So now we'll simulate the buy. This is one of the powers of trade ideas. If you're not aware, we're only doing the last 7 days because we're just sampling a strong market segment. And what we get is not bad, certainly working. I remember thinking, this day here, I think last Thursday, look, we could go into, double click that day right there. I'm going to throw that down there. And then let's rewind this a little bit, and we can go through, and this is showing us that these were the trades that worked. Now what we're going to do is we're going to be looking for this blue arrow. What I did is I highlighted last Thursday, and on that day we had a lot of stocks that looked like they were winners. We had a lot of samples here, so we can just kind of get a visual cue of what these things were doing on that day. All of them were kind of at or close to that level. I'm going to close that. Dan's going to kill me, but I'll close that just for now. And that one blasted through. That one didn't work. It probably stopped out. That one probably stopped out. But just in case you didn't know, this is available. You just click. There we go, right there. That one probably was a nice bounce for the day. That's kind of what we're looking for. A nice bounce off of a strong stock. Exhaust the sellers, capitulate, and then buyers are waiting right there. Then you get a nice bounce right into the end of the day. So that's the gist of this scan that Truth Seeker's talking about, that he's been using this in practice, which is great. Yeah, the blue arrow is the buy signal. In order to get that, you've got to click on the symbol. And so as I fast forward to today now, and we'll click today in NVIDIA, and we're going to get today's blue arrow right there. That's why I zoomed out on the 5-day, because we were back testing that a little bit. But anybody can do that. And if anybody's intrigued and watching that and has trade ideas, you can right click and back test the same thing. You know, what we just did. We could change our risk management to what we had before, maybe risk 1.5, try to make 5%, see if that changes anything. Pull up the first one. So we should have 2. There we go. What happened? Let me try that again. Yep. So just by a simple tweak, we're still sampling the same stocks, but we gave it a looser stop and a more aggressive target. And look at that. The more aggressive target was the key. Can you guys see that? I mean, it's just night and day, before and after. I had my risk management capped too small. So, I mean, the important risk is the downside stop. But it's a good lesson here that we probably, in terms of trying to automate and backtest a strategy, it capped itself by not putting it at 5%. We got a lot of extra juice out of that. What if we do it at 6%? We run again. We just change that. We're risking 1.5% to make 6%. Can we improve on that? Again, this is kind of a day trade. About the same. So, good question, David. Let me share this before I forget. For anybody who wants to open it, you're welcome to use it. So, how do I use that 130? You know, the 50-day moving average is the same color over here, dark blue, whatever. I color them the same because they kind of mean the same thing to me in their respective time frames. And that is, it's a general bill of health. So any stock on the board that's, you know, you can probably find some here that are under their 50-day moving average on these high short floats, downtrends under their 50. That one's over, trying to get through, battling it. But the point being is, it's an area of interest to me that tells me if the stock is healthy or not. And so when we zoom into the 15-minute time frame, if a stock is healthy, it's going to find buyers there. And you hear people talk about, you know, liquidity hunt. Well, and also VWAP, volume weighted average price. You got to understand, retail doesn't run the market. The big guys do. And they give their, you know, 300,000 share order in a stock to a certain market making firm that's algo driven. And they better be sure at the end of the day, they can report back that they filled their buyer, their client, 300,000 shares in stock XYZ, NVIDIA, whatever, at a price that is just above the average VWAP, because that's how they're measured. That's how their performance is measured in the institutional world for the big guys. And they're a hero if they can average that total buy order at or below the VWAP for the day. They'll get fired if they wind up just plunging into something way above the VWAP. They will never get another order nor business again. So just perfect example here, KSS. You know, they ran it up. We've ran out of buyers. So where's the liquidity hunt? Well, the market makers probably have a way of just lightly stepping it down because they know down here there are stop orders. And that is where you can start to get more deals done. So I would venture to guess as this thing comes down, you're going to start to see more action at this level. So what I do is I just look to see what's happening at that level. Are the buyers going to win or the losers going to win? And how do I determine that? Very simple. One, definitely two closing candles, closing 15-minute candles below tells me the buyers are losing and the sellers are starting to push through that line. So it's an area of interest, my friend Brian calls it. And he's right. You know, no matter what your position, if you're thinking about entering a position, you can use that to enter. If you're thinking about managing a position, you can use that level to manage it. And I do that all the time. I've actually been trying. I'll go through my list now of things I've been trading and holding in my new Trump administration hedge fund. And I don't say that lightly. You don't have very many times that come around where you have such a fork in the road of intense policy change. And as I go through these names, a lot of that is kind of in the back of my mind for new developing sectors and or sectors that might benefit from the new administration. So I'm trying to hold on to these names. And there were a few instances today where I added to something I wanted to add to, but I waited for it to pull down to that. If we see one, I'll let you know. So in order of open P&L from best to worst, I took 1/3 NBIS home. This is a foreign Russian stock. They had earnings last night, so I only took 1/3 home, and it doesn't take much. So I collectively turned that first move into cash. All of this was turned into cash, and I kept 1/3 into that. I'm going to keep that running. I can recycle that cash into other things. This is AI infrastructure. And again, this is, I think, not just the new administration, but globally, we all know AI is here to stay and it's growing extremely fast. We've heard about the AI data centers and the GPU clusters with NVDA and all that. Well, this is a component of that. And I think this is a pretty good global company, and they just had earnings and they seem to be happy. So good on that. Tesla, you know, that stock. I'm in just a full weighted, and when I say full weighted, it's like 10% position, maybe 8%. I'm not doing anything with this. I'm just sitting in it, recognizing that this company is not just a car company, even though they're dominating the car sales. They're going to be a robo-taxi, and they're going to be into robotics big time. The Optimus, they're building just giant factories to build Optimus robots, and they're the one that, of course, Elon's team is leading the pack when they survey all the different types of robots that are out there. No plans to sell that. MindMed, talked a lot about this one coming into the week, and here's a perfect example, guys, of just letting the stock technicals tell me the story. I mean, there's so many things going on. There's a inverted head and shoulders. There is a cup and handle. It's just all third time's a charm on this 200-day moving average, and the 200 is just a brick wall of technical analysis. And so we exploded through, and the reason I'm in this is fundamentally, and now the chart finally is confirming the story the last 2 days. RFK is just going to take a buzzsaw to pharma, big pharma. And a lot of people are going to realize that maybe they don't need to take things for PTSD and depression, that maybe psychedelics can be a solution. I think we're just ripe for that turn. And MindMed is going to be the forefront of that. You can see I took it through earnings and just been sitting through that one. Yeah, the Tesla picture, idiot governor. I assume you mean California. So MindMed, third, took off 1/3 today. Okay, you see that giant move, and I maintain a lot of times once you get day one, was yesterday, day two, about a day and a half before short-term momentum players like me like to start taking profits. So I sold some at 8, sold 1/3 at 8 today. Now I'm just going to let 2/3 work, and maybe headlines will continue to pour in. Oh, Minnesota. Yeah, he is an idiot. Right. He was dancing and prancing about the stock going down on stage. It's gone up 58% since then. Oh, MindMed, new high here. So trying to buy reverse midday. So anyway, And for the new traders, you know, taking some off after a huge run is so important because you get that small window to pay yourself. You can either recycle that into something else, or you can likely, you know, pick it back up cheaper if you want. Next in line, OKLO. Now, I was thinking about this. I've been watching all three of these: small modular reactor, SMR, NNE. This one's still kind of coiled. This one might be an opportunity for some if you're not into this sector yet. But OKLO, small reactors, there's a huge story developing. Trump basically promised all those countries, if they come and develop and build factories, power will be taken care of. And I think what that means is he's just going to legislate and allow for, the legislature will allow for nuclear green lights. And it doesn't take 10 years to build a facility anymore, because you can build just like an RV or a manufactured home. They build these portable modular reactors, and then they can drop 1, 2, 3, 4 to scale in however many of these giant facilities that are going to be built are going to need. It's a perfect solution. So these three companies, I call them the nano nukes, SMR, NNE, and OKLO, I'm not interested in selling. I think they're just the beginning of a new wave of powering the next generation of the stuff we're building. So you can hear I'm long-term in this stuff, hopefully. At worst case, if we have a major market correction, I might sell half of everything, but keep them and trade around them and pick them up cheaper. That's always a possibility, but I'm not losing sight of these names that I'm giving you. BBAI, the trade of the week, taking its own sweet time, but I like the daily over here. I talked earlier about that 50-day moving average. It just dominated BBAI, and then we got that pop above. Here's our day and a half, right? 1.5 days, and then big move, sell-off, consolidation, consolidation. Now we've got these nice supporting lines. This is the kind of stuff I like to hold on to, so I'll give it all this. That's probably my most heavily weighted one too, because it's the trade of the week, and I like it. All right, cool. Let's keep moving. The next one is Rumble Media. I didn't have enough of this one. I think I mentioned last week I was looking for an opportunity to buy more. See that green line? That was my limit order to buy more. I doubled up on Rum. Pretty proud of that entry. I did it because it was right there at the rising 10 SMA. Here was a big move. I wasn't going to chase my entry because I was already positioned. So I got this move, but I didn't have enough. So this is the, you know, anatomy of how to add to a trade around. And the way I like to do it was just be patient, be patient, be patient. Then I got my pitch. Usually it's going to be on the open. As you guys haven't figured out, the open is where all the stops are run, and that's where all the liquidity hunt happens. So we've got a nice drive down, and I doubled up at I forgot what it was, 968. I forgot. All right, we'll take a break and see what's up with Jason. Trying to figure out a way to find stocks that's in a consolidation on the daily. Okay, so the best way to do that would be, the first thing that comes to mind, I'm just going to go to a config window here, which brings us to the magic search window. And from here, we can do a lot of things. We can either get GPT help. That's coming. I don't want to tease you with that. That's in the next version. Sorry. I know, Pepe, I know. Range. So we're talking about like a range suppression or a range consolidation. So now we have to figure out the time frame. And you said daily. So we have the choice here between like 5-day range. We can play with that in percent, or even 10-day range. Might get more replies with the 5-day range. And then if we click help, you know, it basically just tells us the exact formula, which is cool. But the highest price of the 5-day stock over the last trading days and the lowest. And so, and the last price. So what's the percentage of that range and divided into that price? So we look at some of these ranges here in the example, 5-day range, 12, 7, 9. So let's play with something around no more than maybe, I don't know, we can try 7, 5%. All right, so what I'm going to do is we're just going to start from scratch. And we're not going to do that. We're going to do we're going to use that. I'm sorry, alert window, because we want the alert along with that. So back to the help. Tampa probably in the next 1.5 to 2 weeks, maybe. I'm hoping it has this GPT. But please remember, everybody, we do have a GPT on the homepage. You can always go to the homepage and use this same engine right here. You're going to get the same reply as you would. We're just building it into the next version. Range 5. So 5-day range. Percent. Let's add that filter. And what do we say? We're going to cap it. We're going to cap it at 7%. Let's do 6. 5 isn't that long. Let's put some basics in there. $5 minimum. Relative volume doesn't really. Yeah, I want relative volume because we're going to be breaking out. Relative volume of 1. Volume today, maybe 300,000 shares would be a good idea. Maybe even 100% normal volume for the 1 minute as things break out. And then the 5-day range capped at 6. And then we're going to make the alert a new high. Nope, we're going to make the a new daily high. And we'll put 5 in here too. See if that helps. So let's see what we get. The very first one that came through is CTRA. Hey, look at that. Coming out of a nice little range with good volume. So Jason, that's kind of the basics. And so I'm going to give you this now. And then some things that you could do is you could tweak the range to make that tighter, max of 6%, maybe make it 5%. You could add some volume filters for some more volume confirmation. But just in that respect, we're getting 3 coming through quickly. Now, that's not exactly something you want. That's breaking out late. That could be early. You could also experiment with the 10-day range. I'll just put that in here for you, and then you can enter a value if you want. So I'll add that filter, and then you can play around with the 5 or the 10. Okay, hopefully that translates. Let me see if that's still in there. Yep. Okay, so now I'll give you the cloud code, and this is a starting point for you or anybody else that's watching and might want this. And play around with it. You can come back. I'll be here again Thursday. If there's any tweaks or any questions, that's one way to do it. Let me see if there's any other way. Yeah, there is another one. Channel breakout. Okay, this one too. Channel break. Let's add this alert. I'm just going to add that alert. I'm not going to checkbox it, but I'm going to give you a new link, and then that'll be in there. You can checkbox that and play with that. Instead of a new 5-day high, you can try. And what that means is that you're letting the trade ideas algorithm kind of determine what is a channel breakout, and you're just kind of relying on the mathematical eyes of trade ideas. So I can update that for you. You can play around with that stuff. All right. You're welcome. So let's go back to the new power portfolio that I'm trying to hold on to. Again, I'm not swing trading these as I normally would be doing. Normally I'd be like surfing the market, and I might be out of stuff altogether at some point, but these are names I feel this is the point in time to try and sit on and fade out as they work, and then recycle that cash into other things, not just get stubborn. But I left off at RUM. Okay, now Kodak. This is a good story, right? Kodak. Everybody knows Kodak, but this isn't film. And this company's just been kind of sitting around reinvesting its capital because its retirees are dropping off and it's buying them out literally. And they've got, they're building out what's called an API facility. And that is a manufacturing plant for basic chemicals that anybody like Roche or somebody could come over here to our country like Trump wants and build a factory to build pharmaceuticals to avoid the tariffs. That's why we're doing the tariffs. And in the process, a company like Kodak, they're just waiting, saying, hey, we're just a train load, a truckload away of all those basic materials you need right here on shore. So they're part of the supply chain for basic chemicals. I think that's where this company is going to evolve to. Now, does the chart confirm the story? Well, it's given me hope, because what did it do? It faked out here above the 50 and went under the 50, faked out above the 50, and then this is actually, in hindsight, is good. It's almost like pulling an arrow back, really washing out the weak hands, and it's done nothing but rebound since that day. So now it's just sitting here consolidating nicely. There's no moving averages above it. I just call it, sitting in clean air and then shifting to the intraday. Look at how it's playing and toying with the 5-day here. So, keep an eye on that. But that's also in my portfolio. AMC, well, there's nothing I like about movie theaters, but what I like is the possibility of a headline that could come out at any point saying we're going to investigate naked shorting. This new SEC is tired of naked shorting. And if that happened, stocks like GameStop, I almost bought today, but I didn't. That's holding up pretty well in the daily. But I've got exposure to naked shorting with AMC and also DJT. Rumble, as I started off talking about, I think it's just it's bouncing nicely off that perfect double up that I bought this morning. I forgot to mention, this is, new media. There's a lot of new content creators rushing over here because they're getting a better deal than they might get on YouTube. It's video. A lot of podcasts are showing up over there, big names. So it's alternative media, and the chart looks wonderful. Sure, Todd, SRPT. Therapeutics, all right? So they're relying on biopharma products getting approved. Does the chart confirm the story? Well, not really, but there's always a chance to break the downtrend. It suffered a really big sell-off. So if something's going to happen to them, the chart might whisper in our ear, there's the earnings day, the yellow stripe, big gap down, and now it's working out off the weak hands, said, I'm done with this thing. The very first positive plus is it's possible, if it continues, today could be the first closing day above this first hurdle, the 10, then the 20, and then the 50. You get, a couple of momentum days going, and this could be early. I would also venture to guess let's do this too. We can put another indicator, which I'll use sometimes. Let's change this. Also, we can look at it through the trade wave, which we haven't talked much about today. Trade wave does not have it as a buy yet. However, I was just looking at lower lows here in the RSI, and going lower, but not quite as oversold. So there's a very good case to make for buying stocks like these, because your risk reward is so solid. Your out is extremely defined. Your out right here is 34.50. And look at how it's taken intraday, and it's just riding the momentum now. So it's possible, if they might be one headline away from a nice pop, but technically speaking, the last time it did that was back here, and then it had to go into earnings, and then earnings drove it back down. So you got earnings behind you now. Maybe this second time is a charm. You agree with the stop? Yeah. Your risk is defined. So you could say, what could I risk to make $60? There's a pretty good risk reward there. You're not asking for much. If it were me, honestly, if I got that pop, I'd be selling it at the 50, at the declining 50. So this is an oversold setup. It very well could work. Not bad. I do this kind of stuff all the time. I just don't talk about it because it's not always sexy and doesn't always work. But if it does work, you want to know where your out is. So we did Kodak. We didn't know AMC. All right, so this is a trade around, and I'm glad to see it's doing okay. Quantum stocks, they took off again yesterday. Okay, you got your QBTS. You've got, look at that. You've got your ARQQ. Matter of fact, Dan was even nudging me in the ear. My NBIS stock, the one at the top of is basically kind of a quantum computing facility as well. You've got other names, ARQQ. So quantum is the exposure. I want some of that. And I didn't really get any. Can't type. I had some Rigati, but I bailed after earnings, and I didn't like the choppiness of it. And IONQ, the choppiness of that, I don't really like that either. But these smaller name ones, they can get up and get going. And I've scalped some of these over the last few days, and so I just kind of keep recycling. There's a huge appetite. Green light is back on for quant stocks. So QMCO is my exposure to quant. And I've actually, let me explain something. This is a thin stock, 6 million. That is very thin. And I looked left. Is it this one? Actually, I'm using the round number. I'm going to sell. What am I selling? I'm selling 1/3 at $14.99. These stocks like to go to the round number. And so if it busts through 14, it could be a fast trip with only 6 million in the float to 15. So if there's any pilots out there, you know you've got to fly the plane 2 miles ahead of your nose. And so I've got an order sitting. And so I can just be talking, doing an email, whatever, turn around and bing. This thing is so thin, it could run so quickly. You only get one shot at that level. And so you might as well have your mind made up and be sitting and waiting in these thinly traded stocks, because if it pops, it'll happen quick. All right, we're getting near the bottom. DJT, just again, this is also a short play. If there's ever a headline that says we're going to look at naked shorts, rum could also be included in that, but DJT, AMC, and rum kind of banking that if that headline comes, that's kind of a lottery tickets. It's it's a gamble. SOUN. Now this one is also an AI stock, and Andy and I have been biding our time. We've been watching. No way would we chase this up here, but we watched. We nibbled yesterday half size at the 10 SMA, and then we saw it this morning. It was going to break through, so I put an order in to buy at 10.01. So if they want to get to 10, they had to go through me, just like I'm selling at $14.99 on QMCO. So now we've got an intraday possible change of direction here, and we're way below this 5-day. So there's some room. SoundCloud, it showed initial euphoria. The volume's dying down is what we want to see. So my second ad was another nice ad this morning on the open, and I was kind of coming in prepared. You're going to have to make those decisions in the first 40 minutes, because that's when the drive downs will usually occur. And so I had my eye on sound and rum, and I got my fills in both of those. So this is an AI exposure. Again, BBAI is my other one. And last but not least, my nemesis. Patrick, are you here? HYMC. Gold mining stock. Gold stocks were strong, still strong today. Very strong. But silver and gold, very strong, very strong. So HYMC is lagging the group. And it's also a play on, I think, could be rare earth minerals. It's in Nevada. They've got a giant area. But this one has gotten the best of me lately. And I'm trying it again, only because it's like I was on a game show and I had, an extra scrap of money laying around. And I just said, all right, gold miners are so strong today. I'll buy this pullback here in HYMC, which is right about here at 83. So that is it. I'm fully invested in those names. Now, tomorrow I could come in, I could shave off something that's really running. If something's not working, I'll sell that. But that cash, might always be recycled into something else. Just like MindMed turning, maybe it's going to hold that bottom for the day there, but I took off 1/3 when I could. That's the axiom. Pay yourself when you can, not when you have to, or sell when you can, not when you have to. Yep, there he is. Yep. I really I wanted to buy CDE so bad because I saw this has been a strong one and I saw it looking good this morning. But I just said, I'm so sick of trying these gold mining stocks. They get the best of me. Nice pullback into the 10. But I didn't. And then I saw CDE running. So what do? You're like, oh, okay, I'll buy the lagger, which is always what I do. Sometimes it works and sometimes it doesn't. So, all right, that's a lot of talking. If anybody's with like sitting, not wanting to interrupt, no problem. I mean, you can ask your question. I don't know if Vito's here. I saw you were hammering Chris pretty good and Andy pretty good on Friday. I'm happy to help Vito if you got any questions. Just make sure you send them 2 at a time. What's the market doing? Hey, we're getting a little, look at that. You talk about a strong market. 2 things. One, oh no, Moody's downgraded us. 37 trillion is a problem when 36 trillion wasn't a problem, but market. So the market gapped down yesterday and made it about as easy, and Andy and I were discussing this. The market made it about as easy as possible for somebody like us trying to hold a portfolio. There was no midday sell-off to sit there and fret and toil over. We got a weekend. Okay, weekend. Enjoy your weekend. All right, Moody's, big deal. Let's see what happens Monday. Oh, big gap down. Okay, let's see what happens. The market opens, and that was it. That was the worst of the pain. And in the process, the market got its healthy dose of a pullback. It got what it needed without having to do it midday. We're on highs now in the NASDAQ. Fast forward to today, the market continues to show its buoyancy and its resilience by adhering to the number we've been talking about all afternoon here. It's about 5 tests of the 130 and not a single candle closed below it, again, which would be my signal. Thank you, Mark. If anybody's wondering how to add this blue line that we're calling the 130 or the 5-day, it's the same thing. You just go to indicators and pull up an SMA and add the SMA, and your period is 130 candles because that divides perfectly into 5 trading days on 15-minute candles. And it gives you this really nice smoothed out look. Now, this would look the exact same way if I painted it on my daily. It'd be like, oh, hey, look. But that's just one more line I don't need over here. We can zoom in, and Brian Shannon taught me this. You can ease into this time frame and get a much cleaner perspective. And even when you zoom out, it's nice and refreshing too. You can just kind of really see the bigger picture of things. So what did the market do? It gapped up, trapped the shorts covered, freaked out. They're not getting the pullbacks they need. The buyers, the FOMO, the people who've got cash that want to buy aren't getting the pullbacks they need. So the sideways action just, bolsters the fact that this market is super strong. There's our gap down panic over the weekend, right back into play. And now, as far as I'm concerned, if this market wants to, it's got a blessing for the amount of consolidation it's put in. Remember, markets can consolidate in 2 ways. They can pull back in price, or they can go sideways. And guess which one is the stronger of the 2? Because the shorts can't cover and the chasers can't get the pullback that they want. And people like me and Andy are just like sitting here with our fingers crossed, in the catbird seat, hoping that the one time that we're trying to go full hedge fund here, that it works. But so far, so good. And again, I'm doing this only because of the significant fundamental change that we have right now with the new administration and the 180 and things that are happening out there. So what a perfect time to reallocate, press change, rearrange, as they say in the casino. I was hoping that QMCO was going to give me some love. Let's see. Still way above its 5-day. I mean, it doesn't have to do much, but I'm banking on the fact that the other ones are so dang strong. This thing just has to find a way to go and do something by the end of the day. If not, I'll hold it for tomorrow. I might have to sell a little bit, but I like the possibility. There's the 200-day. It's exactly where you would have. And by the way, I was long into that and I sold that. So this was a buyback from me right about here. I noticed that 13 level was holding. So I added what I sold up here, I bought back here. Only because I saw, geez, look at these things go. They really want these quant stocks today, but you know, it's selective. Some get it, some don't. But I've learned that if you just wait and be patient and not get wiggled out, you might get that blast. And also, I forgot to mention Quantico. One of the reasons I like it is this right here. 31% are short a 6 million. This is a recipe for, this is a tinderbox for a shot to 20. So I said it. Yes, could I go through the back testing on the 130 so we can, yes, review this leader. So anybody reviewing this video later, we'll go back and just, and by the way, I think the settings are still in there, which is nice. So if we go back to back test, we still have what we worked on, right? We got the timed exit, end of day, and the risk management. And what we did was we looked at, like, let's say, crank it down. We say we risk 1.5% to make 4%. And again, end of day, we've already determined that in a prior session is the best time to exit these. This is kind of a long day trade because you're getting a really good contrarian entry, hopefully in the morning where the buyers are sitting and the big buy orders are ready to hold for the rest of the day, hold it up. And then what we did is we said, we only want to see 7 days because the last 7 days have really been, actually we could go more, we could go more because the market still was climbing into those 7 days. Let's go 11. I like the number 11. So we'll start at 11 days and then we'll simulate a buy at a pullback on strong stocks at that blue 130. We've got a pretty good deal here at a 3-to-1 profit factor, average winner 93 cents, average loser 60 cents. Here's our heat map of the days that we looked at this day here. You can click into Thursday, double click, and then you could go back and click in each one of these names and zoom out to see on the 15-minute chart where they were popping into play. Now, if we make one change and use this as our baseline, 65% win rate, 113 trades over 11 days, that's not bad. Profit factor of 3, kind of a dark green color here. You can use starting equity. You could say, oh, I want to use 100,000, or you want to allocate $10,000, or dollars is the way to go. We don't have commissions anymore, so we can actually get rid of that for the most part. Let's change that to 10. Let's change this to 100. It draws it on the fly. It appears. Is it? Okay. So what we can do now is run a second run and use this as our baseline, and it'll keep it up. So we run again, but this time we discovered from an earlier run that if we don't limit our profit target, again, we're asking this thing to run all day. What if we want to get 7% out of it? And I think this is where we might see some more improvement. Not much. It's kind of 6 of one, half dozen of the other, isn't it? Virtually similar. That was over the course of 11 days. When we did a course of 7 days, we can do that again. Let's run that again over 7 days because that's where the real meat of this move has been. We might get some darker green. A little bit better. Okay, you only have one line on your back test. I have 3. It's because I turned off, I think, or maybe it's the commissions. You can see, does that do it? Because net equity curve, including commissions and gross equity. So let's try that again. Okay, because it keeps throwing commissions in there. Maybe yours is set to not have those values. I don't know why it won't update, though. But you'll see from the legend down here, it's the gross equity curve is the dark line. And then it starts to show commissions is the middle line. And then the net equity curve, I don't know what that means. I'm not sure why you wouldn't have, you might be, are you on the, not on the drawdown? If there's values in these windows, those should show up. If that doesn't work, I don't know. You could email us and somebody else might know. I've always had 3 on there. Well, it keeps adding the commissions into their run, and that because of that, it adds the lines. If you need further help with that, you can email us. Chris might know. All right, I got to leave in about 6 minutes. So if you're sitting on a question or you want me to look at a chart, I'm happy to do that. Hello, hey, Vito, what's up? Okay, how does one perform back testing? So it'll only work on an A window, Vito, because we have an alert. We have an event in the alert windows. New low in this case. We're looking at, in this case over here, the new low is pulling into, there's the alert new low, and it's pulling into the 5-day moving average. So an alert window, you just right click and go to back testing. And from here, you've got all of these parameters. I'm using end of day. You could do at market open, market close for swing trading. We were playing around with enabling a stop loss versus a profit target. You can play with that. One thing I am going to do is I'm going to drop, because there's a lot of information I got to run in 5 minutes, but I can give you exactly what I'm talking about here, and anybody else, the link to kind of discover more and see a video on it. And so it basically just tells us, what we could expect. We can go back as far as, 60 days, but watch, if I run this, we are a bear market too. So if I simulate buy in the full database of 60 days, it's not going to be as good as the last 7 to 12 days. So you'd say, look at that, there's the bear market. And then all of a sudden, this alert, this is a great example of how just because an alert is on the screen doesn't mean it's always going to work in the market environment we have. But we can see that, since last few weeks, this alert has worked okay in back testing. How does one load many symbols into a sector and load them as a separate window? You have to create a symbol list first. I can look at Hood. Oh, we got Pepe's answer. Okay, trade commission is set one line and commission another line. If those are set to 0, both are set to 0. Okay, if that works, cool. Robinhood looks pretty good, and I'll tell you why I like it, Vito. It's busted out of its 50-day moving average back here, pulled back, and it's like a hiker. It keeps making a higher base camp. And this last base camp was a sideways base camp. And stocks that are strong are going to stay above this 10-day simple moving average. That's why this line right here is on my daily chart. If a stock is moving above that daily 10 SMA, it's telling me it's strong. So a lot of times, if you can buy that stock right at or on or close to that line, the better after a pullback or a consolidation, which is nice. Yes, you get confirmation. Hood looks good. And on the intraday, it's doing the same thing. So on the intraday, my 15-minute chart, it's also riding its 10 SMA. So I call this the momentum line, whether it's the 15-minute chart or the daily chart. The 10 simple moving average tells me the stock is in momentum if the price continues to stay above that. Oh yeah, Qubits. We were talking about the Q stocks earlier. This one's leading the way today. But it's concerning me. Look, it's a beautiful consolidation back here. But we've had 2 days of giant run, and now you've got all these people who want to take profits. If we give back more than this and we start to get more red here, we could see some profit taking. So if you're in this and you have big profits to take, what I would do is I wait for the first 15-minute candle to close. And we've got 9 minutes still. The last candle did not close below. This one did not close below, nor did this one. But 10 minutes from now, if this candle looks just like this is what I use to exit my winning position and try and walk away with as much money as I can right there. That's my signal candle in 10 minutes if it looks like that. So that's what I would tell you about qubits. I am in a quant stock that I'm waiting to catch up to qubits, QMCO, and it's adhering to its 10 SMA here for the moment. There we go. I'm okay with this pattern. You know, I'd like to have seen it taken off earlier, but as long as it holds that line right there, I'd like to see it try and take on 14 again before the close. If it doesn't, well, then it's just kind of stuck between these two moving averages. I don't think EMA and SMA are really that much difference. I use simple moving average. So does Andy. So does my other friend, Brian Shannon, who's written a book on it. So the 10 SMA, the 20 SMA, and the 50 are key moving averages for my daily charts. I don't really get caught. And when you really get down to it, a 9 SMA and a 9 EMA and a 10 SMA overlaid, they're going to be pretty darn close. I don't really trade the pre-market, but I will trade the open. You might have missed it, but I had two excellent entries where I was adding to my position. Rumble Media, I did exactly what I was just talking about. I put an order to buy at 967, I think, and it got triggered on the open. So the open, you're going to see a lot of driving down to levels where liquidity and buyers are waiting. But if you've been long this stock, the worst thing you can do is put a market stop in the first 15 minutes because all these people got market stopped out. And so I wait and look for a level. And in this case, the 10 SMA was the one that I bought. And then the other one was, what was the other one that I added to? It was OKLO. Actually, OKLO was close to this one. What was the other one? I'm trying to remember. It escapes me. But I don't really trade pre-market much. The only time I'll trade pre-market is if something's going absolutely crazy and I'm in it and it's gapping up like 50% overnight. I'll get up in the middle of the night and turn on my computer and throw an order out to sell just if I can get lucky for profits. But I don't like to take entry positions in the pre-market. How do I gauge reversals and when to come in? Again, I like to use closing candles on the 15-minute 5-day chart here. You see that the NASDAQ all day long tried to sell off. And this is why I use this indicator. 7 times it held the price up. And so a reversal, you know, basically just comes out of congestion once it holds that level. That's a good current example. Oh, actually, I'm sorry. I got to run, you guys. I got a meeting at the top of the hour. But thanks, Vito, for the last minute turbo session there. Hopefully everybody got something out of that. You're welcome. I'll be back Thursday, I believe. And thanks for all your questions. My sessions always seem to go a bit more trading oriented, which is good because I think I can help people avoid some of the pitfalls that new traders tend to fall into and psychologically and all that stuff. Could I share my layout? Yeah, I'll share my layout before I leave. It's real simple. File, save layout, entire layout, save and share, copy. Now my symbol lists will not translate, but everything else will. All right, guys, I got to run. See you later. Thanks.